Well, happy Monday once again, everyone. Bryan Devore, Devore Realty Group, Berkshire Hathaway Home Services, California Properties, with another Monday market moment. This week, we are going to answer the question, why is the market like peanut butter? Well, we're going to get into that in just a minute or two, but let's talk about the latest stats first. Active listings, 3,096. That's down 51 from last week, with a median list price of $965,000. That's down from the week before. Average days on market, 52, one fewer day than last week. Pending sales down 61, 1752 is the total number of pending listings. Median list price, $825,000, lower than the week before. Average days on market, 26, one more day than the week before. Months of inventory continues to rise. We're at 2.28 months of inventory right now. Here's the chart that shows total actives and total pendings. You can see the inventory did peak, it seems, a couple weeks ago, and it's steadily coming down. Pendings also easing down. Since last week, we did see a big bounce back in the number of homes that came on the market, 535. It's an increase of 232 from the week before. Why? Well, again, Thanksgiving was a couple weeks ago, so we were just back to normal, I guess. Median list price, $849, no change. New pendings up 42. That's 275 new pendings came out, went into escrow last week. So again, a jump from the week before, which was the week of Thanksgiving, but way more homes came on the market than went into escrow. Median list price, $799.9, lower than the ones that went pending the week before. Average days on market, 27, big jump, 6 more days it took for the homes that went into escrow last week to go into escrow versus the ones that went into escrow the week before. New pendings listed within the last week, 30. So 11% of the homes did sell in the first week. It's been about 3 to 5%. That's a big jump. So over 10% of the homes are selling in a week or less. New pendings listed within the last 2 weeks, 70, 25%. That's been closer to 40%. So kind of an interesting anomaly there as far as the number of homes that are selling within the first week versus in the first 2 weeks. Since last week, we saw 318 homes close escrow, another big jump of 123, again because of Thanksgiving. Median list price, $852.5 with a drop, and median sales price, $858,463, also a drop. But reversing the trend, we're now the ones that closed escrow had a median sales price higher than the median list price. Average days on market for those homes that closed escrow, 25, increase of 3 days. The least expensive sale, there were 2 that closed for the same price, $225,000. One was in Oceanside, one was on Palomar Mountain, and it was a cabin. Kind of cool. The most expensive sale, $23,500,000 in Rancho Santa Fe. And here's a chart showing new actives, new pendings, and new closed sales. And then you can see that the new actives was about the same as 2 weeks ago. The new pendings was about the same as 2 weeks ago. Closings, again, about the same as 2 weeks ago. And we can see the median sales price higher than the median list price. All right, here's the Stephen Thomas reports on housing. And you can see where we are inventory-wise versus the last few years. Typical peak is during the summer. Didn't happen that way this year. We did seem to peak earlier this month or last month in November, and we're starting to see a steady decline, but gentle, not a huge, steep decline like we've seen in years past. It's sort of a gentle decline. Meanwhile, the pendings, or the demand rather, you can see relative to years past, kind of a gentle drop. Other years was a steeper drop. And last year, we're following about the same as what we were last year as far as the gentle decline. And then, all right, peanut butter. How is the market like peanut butter? It's more like a peanut butter jar, actually. When you have a peanut butter jar, you get to the very bottom, you're kind of scraping the bottom before you can, get into a new jar of peanut butter. Well, that's what we've been doing over the last year. And you can see active listings, active inventory, and demand for the last 2 years. Last year, you can see in the dotted lines, active listings. The solid line yellow. For active listings last year, you can see how the listings skyrocketed up when inventory was down, but interest rates started going up, and then a steady decline. So last year, inventory rocketed up and then came down. And then you can see last year's pending sales, the dotted yellow line, kind of hovered around gentle decline throughout the year. This year, we're scraping the bottom when it comes to the number of people looking for homes and the number of homes they can actually buy. Inventory for this year, way below where it was last year, and the number of people looking for homes lower than it was last year as well. So low demand, low supply. We're kind of scraping the bottom of the peanut butter jar. If you don't like the analogy, blame Stephen Thomas. He came up with it. I thought it was kind of cute. One thing I do want to point out, though, you can see 2022 listings. The trajectory was heading almost straight down. We're more of a gentle decline. So it'll be interesting to see how we look in inventory wise the next couple of weeks and entering the new year and see where the demand, now that interest rates have come down a little bit, maybe we'll see a flattening of the demand. We'll have to wait and find out. That's it for this week's Monday Market Moment. Don't forget to scan the QR code to track your home's value. If you have any questions, feel free to give me a call, send me an email or a text. I'd be happy to help. That's it for this week's Monday Market Moment. Hope you have a great week. I'll see you next Monday.